Today we're joined by Vlad from Tau Labs, who's been on the show a couple of times. So I think there were quite a few situations to monitor over this weekend. I hope there was ample excitement and stuff to look at. And we'll discuss how this affects markets going forward, the absolute state of DeFi yields, where RWAs are moving, and how the industry in general is going to go forward, because I do think that there are, even though it feels kind of quiet, there are large developments going on in the background that do shape how we all interact with DeFi and crypto as we've known it. Vlad, how are you doing today, and how have you weathered the weekend?
Good. Yeah, it's weird times we're living. Crypto's more quiet, and it really puts things in perspective how we're in a niche industry compared to everything that's going around in the world, especially wars, and how oil is opened at like 10-12% above where it closed on Friday. Yeah, just been monitoring the situation, the monitors.
Yeah. So it actually, something did happen. So all the chuds must be in major disbelief still now. One notable thing is that I think this was the first major event that also drove attention of 24/7 on-chain markets for traditional assets over to traditional media and traditional finance media. So this might be a backwind for hyperliquid and all the perp dexes and all the commodity dexes that are enabling access to all the assets 24/7. Do
Let's
you think that this is going to be a major narrative going forward, or will it still be kind of a niche market? Because even though these assets are available, they are reasonably liquid. All the technical and risk and compliance implications are not yet at a stage where this is relevant for large TradFi funds.
I think it's going to be a major narrative going forward because of two reasons. First of all, we see a trend that happened very slowly, started happening in the early 2000s with markets being democratized. Um, like before that, and even in the early 90s, before Forex was open, investing in financial markets was something for quote unquote accredited investors. So degens with a diploma, I guess, mostly oriented towards banks, institutions, and funds, and then it became open and anybody can invest now. But the thing is, it's still something where retail will for quite a while still be extra liquidity for institutions. Retail tends to trade the news, and by the time something hits the news, you should be already positioned to exit, not to enter. And I think this is going to go even more. This is going to accelerate even more for two reasons. First of all, we're going to have the how are they going to do it in the end? They said 24/5 markets, so 24 hours Monday to Friday, and then close for the weekend. And somebody also discussed, I heard at one point, having the market open 24/7 without like only with 6 hours being allowed on Sunday to be closed. And the second thing that will accelerate this even more are prediction markets. I forgot the amount. I should have saved it for the episode, but an insane amount of money was bet on Iran, of course, a good chunk of it by insiders, but people are betting. We are betting on everything now, and the line between betting and trading and investing is very, very fine. That is why you have so many brokerages generally trying to like they have the same hook mechanisms as casinos do. They give you free money for you to play, and you traded a good market, you doubled your money. Here, trade again. You lost now, but hey, you'll be better next time, because the goal is to make users deposit. And having this market open 24/7 is going to, and also gamified as much as it is going to make retail come even more and normalize them trading these markets even more, getting wrecked. And there's this channel on YouTube called Benjamin, and he said that Robinhood is an amazing app to transfer retail wealth to institutions, and it's just going to accelerate even more.
Hmm. So, do you think that, on the note of retail, because we just had that conversation briefly before starting the stream, is retail moving out of DeFi as we've known it over the past couple of years? And is it solely focusing on prediction markets and the fintech platforms like Robinhood and trading high leverage, high risk derivatives of traditional assets instead of crypto?
I don't know if it's the same demographic. People that gamble with people that trade with people that play poker is generally there's an overlap. But if we're talking DeFi and specific strategies, like with people with people in the dojo or in other communities that we talk to for the strategies that we run at Tao, they are a bit more sophisticated than just people that YOLO. They tend to have like at least I don't know mid five figures, low six figures, and they do care a lot more about making 12-15% a year rather than YOLOing and 3xing something. They do care about strategies. They do care what the underlying asset is, how it's run, all of the parameters. And I'm not sure, I don't know how big the overlap is for them to either do this or go and YOLO 50-50 on when the next Iranian leader is going to be assassinated or whatever. I don't think money will move out of DeFi. I think more and more money will come on chain overall and just trade in general and trade on prediction markets and just participate in markets more. The thing is, a vast majority of retail will keep trading the news, which is going to be very bad for them. I had this conversation recently with somebody that one of the reasons why meme coins are dead is that people have been burnt so badly and it's been so extractive that only a few people that launched scams made money off of the rest, and people are turned off by it completely. We might see the same thing in a couple of years where people realize prediction markets and like consistently betting and consistently winning again and again is not something that can be it's not something that can be done. I mean, you have hedge funds that have been working for decades to figure out how to consistently make money on information that is not fully understood. And in the end, if we are honest with ourselves, prediction markets are gambling. You need, in order to gamble, you need an event which is random with a random outcome, right? Blackjack, you don't know what the shuffled deck is, and now you can't even count them anymore because they shuffle with you several decks. Same with roulette, you don't know where the ball is going to fall. Well, it's the same here. It's actually much worse because with somebody throwing a ball on roulette, the odds are not exactly 50-50, but kind of there. Whereas with a lot of markets on Polymarket and Kalshi, the you just have to track insiders and see the insane amount of money being bet on these huge events or before war is started and stuff. So I think retail will keep being burnt like crazy, and some of them will maybe come back to more longer term investing, delta neutral strats, whether in crypto or just holding ETFs. But I don't think it's going to be an either or, either DeFi, either prediction markets.
Speaking of declining yields, how have you guys at Tau adapted your strategies, and like which dynamics are you currently observing in terms of so I mean, since you guys are very active on lending markets, how do you perceive the whole Aave governance DAO drama? And are there any alternatives that you think will take the lead now?
So first of all, on yields, they definitely compressed. I think we are about at a floor right now, kind of where yields are going to be stabilizing for a while. And the main indicator for this is that borrow rates have though fallen sharply, and they seem to be stable at like 3.5, 4 point something percent for stable coins. As for strategies, well, yeah, yields are definitely compressed. In Finify particularly, they've been trying to unwind an Athena position for quite a while. Slippage is a major issue in these strategies, with these assets usually. So in our case, Infinify has been particularly bad hit because of this, but the new markets that they added are very good. So you just have to wait for yields to get back up. We delevered some of our strategies a bit, just to save the principal as much as possible. But and I've said this previously before, the idea with loops and the points max ones that we do is that you get as much organic yield as the market allows, and on top of that, you get a lot more points per dollar value. So, and the downside to that is you have to tank the volatility. And if you have stomach for it, good. If not, you don't have to. We do have two strategies. I think both of them are going to launch them this week in partnership with Stephen and Max from the DeFi Dojo. and I don't want to say a lot more, but they are going to be they are focused on they're effectively Avethina loops, and I don't want to say a bit more details because I do want to talk about them with Stephen and Max once they're live. There are still yields. There's still stuff you can do. You just got to look a lot harder. And from just to end on the compressed yields part, I kind of prefer these markets because you can see which curator is actually good and actually creative and checks markets and actually comes up with ideas. And you can see which curators just had one or two large LPs and they just kind of coasted on lending yields. Not that that would be a bad thing, but if you have your capital there and you're in a market like this one where yields are very compressed, so it's extremely competitive to fight on yield, and that's kind of where you see that's kind of where you see the skill of the curator and where it matters where your capital is parked. As for the Aave drama, it's interesting. I follow it. I'm not up to date completely on it. I don't know if anything happened since I forgot her name, BSG left. But yeah, it's Mitch from Curve have an interesting point that it's good for the space that the DAO is arguing in public, and I agree with him. That's what DAOs are for. They're supposed to be open forums where people make decisions, and sometimes politics gets messy. There are opposing interests, so
Yeah. I mean, it will be interesting to see how it resolves. I'm not so sure if it's a net benefit for Aave as a whole in the long run, and also unsure if it's a net benefit for the space as a whole. I think the largest insight or beneficial insight we can derive from that is that the separation of DAO and labs entities has not ever yielded a positive result or like positive constellation in this industry so far. So I think the approach that, for example, a Hyperliquid takes, where it is a very small team that can basically do whatever it wants, but it only builds the base layer of an ecosystem, and everybody can build on top of that. Or the approach that a Morpho takes, where there is much more alignment between the token and basically the developing labs entity, that has proven to be much more advantageous so far, and I do think that will only be confirmed in the future. I really don't think that there's any merit in a time where there are at least exploratory paths to also funnel revenue and money made back to token holders, to still keep such a clear separations, because inevitably there will be conflicts of interest.
and it also depends on the nature of the project. Platforms like Aave, power lending protocols, there needs to be a certain level of centralization because you do need to make decisions on how you upgrade the platform. Crypto has an extremely aggressive innovation cycle where if you had a very good idea and you innovated on it, everybody loves you and it's awesome. But 6 months from now, if you don't adapt to wherever the market went, you can just die. There are a bunch of examples like this with protocols that were very, very, very big in 2021 and they're like nowhere now, or they were just big for like 2 months.
Yeah.
After which, I'm sorry, I keep getting pinged on Telegram because we've been nonstop since the beginning of the year. I lost my train of thought. It's also because I spend too much time on TikTok in my spare time. My attention span is dying. You know what helped me, Max? I have a notebook and I write down the math for strategies that we do, and I just force myself to slowly think through, and it does help. It does help. Also touching grass, but I mean, we work in crypto, so we have no idea what that is.
I think we are at a weird point of divergence. I think on the one hand, it has become almost obvious that the industry that we have gotten used to over the past years no longer exists. I think you can see that very well in this tweet by Frank Shapiro and Xavier from Fractus, who was formerly at Chorus One, commenting on it. It's just if you look at the funding trends, if you look at the excitement, if you look at the valuations, nobody is really excited about it anymore. At least if you're looking at the traditional verticals that we've understood as DeFi and as crypto. I do think that a lot of the like relevant players look at a Morpho, look at an Aave, maybe Euler will make it too, look at a Pendle, look at a Hyperliquid. They're able to adapt in terms of who they are working with, who they're catering for, and what assets they're providing. So I do see a bright future there. But the like DeFi industry for the sake of DeFi and the traditional yield farming as we have known it, I do think it will only continue taking a back seat in the future. Like the baseline yield sources will no longer be subsidized and propped up by points programs to the same extent that we have had it in 2024 and 2025. So I would expect that returns overall will compress. However, I think the overall capital managed on chain will grow, and it will grow significantly. What I think is uncertain for both the market participants who are farming DeFi and who are deploying capital, as well as the people who are building and working in the space, is who will capture that value. Like, will all the fintechs be able to just build the tech or integrate existing tech on their own, or will they revert to partnering with certain DeFi protocols and they just try to own the front end? What's your take there? And maybe also from the perspective of Tau Labs, how are you trying to position yourself for this year and the coming year, given all of these mega trends in the industry?
So first of all, I do have kind of a hot take here. I've been in crypto since 2016. This would be my third bear market now. I am completely desensitized when the market is like this, with people telling us that Bitcoin is dead and crypto is over and the party's done. It's never going to be what it was. And I'm also completely desensitized when Bitcoin was at 126K and everybody was saying super cycle, it's never going to fall under 100K again. The space maturing means there will be less and less dominance by retail. And retail is very emotional. You react on news, you react on price movement. Bitcoin goes up. The example with Iran is very good. It went from 63 to 60. No, it went from 68 to 63 when the war started. Twitter was again, oh, it's haha, it's not an inflation hedge, it's not a volatility hedge, it's absolute crap. And then 3 hours later, it was back at 68K, basically already priced in. Everybody was like, oh, look, it's actually holding off extremely well, etc., etc. I don't stay on Twitter too much, and you would think, running a vault curation, I listen to sentiment, and I do, but it's something that I intake manually. I kind of listen to what people talk about in different communities and on Twitter, and that's it. I don't spend a lot of time reading a very long explanation as to why it's over or we are so back. In the end, there is no other industry or tech or place in the world where you can do this much modularity with money. If you want to do what curators do in TradFi, you have to become a hedge fund, you have to have a massive AUM, you have to have a bunch of licenses. Getting licensed even in offshore entities to be a traditional financial institution costs 6 figures, 7 figures. It's as long as we will be able to do money Legos in the industry one way or another, it will always be here. Now, sometimes it'll compress, other times it'll become much bigger. So that's why I'm not at all concerned, and I don't find that much value in saying why. It's like the meme with "it's so over, we are so back." It's literally the same thing. How many times do we go through it? As for Tau, basically outlined our thesis. Our thesis is that as the space matures, you said it earlier, more yields will compress, but more capital will come in. You can't grow into the TVL by a factor of 100 and have yields go from average 6% to 10 to 15 to 20. It's the other way around. You have more capital for lower yield, but it doesn't matter because the fees you make are on a much larger AUM. People that invest, they're on they invest in with a much longer time horizon. And retail things very differently from larger funds. Larger funds that we talk to, are not really shaken too much whenever stuff happens. They still do their stuff. They don't panic. They sure as hell don't go on Twitter and say that either we are so back or it's so over. Let's go back to Wendy's. So for Tao, we will keep. We think that this, especially the curator space, is very young, and we will keep doing what we've done until now. We couldn't compete from the start by having large LPs or by just being very very early on Morpho or other stuff. We always grew by just having like really out there strategies a bit earlier than others, to not say first, because we didn't invent loops, right? And we'll just keep doing that as long as Tao will keep offering diverse strategies. I think we will just sediment ourselves in this space a lot more. And no matter how large overall DeFi is going to be, we're always going to be a big member of it. And this is what you should do, in my view. People should focus on building. Market conditions like these are great because the signal to noise ratio is very good. And if you just focus on building, on doing stuff, then that's really, really all you need. And just to finish on this, most of the large projects and the large curators of the last cycle, they started building stuff in the bear market. They started building stuff after FTX collapsed. Some of them even like just as FTX was collapsing. Hyperliquid is a very good example since you talked about them earlier, right?
I agree on a lot of the things said there. I think the continuation of the like bull bear market sentiment from last cycle. I mean, that's the first full cycle that I lived through. That was the last one. I'm not sure if it makes complete sense to assume that to continue, just because the demographic of market participants has changed quite a bit, and just who has been
I am now the only host.
We're back. Perfect. I think
I was the only host
type of
for a
market
minute. I entertained everybody. It's all good.
Nice. Good that you kept the stream alive. I think the type of market participants have changed. The sentiment of like DeFi native participation, I'm not too sure if it's like going to improve anytime soon. But at the same time, I don't think the whole conversation of is the industry dead, will crypto die, this doesn't really make sense anymore. Just like given the state of the market we are in. I mean, the stuff is being used by large players, by much more relevant players. So this is like asking in the like 2010s when you were at the like curve of the internet being adopted by much more people, by like normal businesses. But like a restaurant with an online menu is still a restaurant. It's not an internet company. And we'll see a similar thing with crypto, just as a technology. So I think the whole sentiment discussion will certainly move into the background. It's just it hasn't been interesting in that sense. I still think that there will be like innovation in terms of like DeFi protocols, financial mechanisms, etc. But the vast majority of attention, I also think of like capital and human capital, will be devoted towards bringing on chain what already exists in markets, in traditional finance. I don't think that there is right now the room for 10 or 100 more 0 to 1 paradigms that we are trying to find in that very small capital and small participant base of DeFi. While right now, basically everybody is starved for returns, everybody is very cynical. You just see it if you're looking at the TGEs of all the protocols running points programs. Pretty much all of them have disappointed to the downside. I do think we first have to get some like more serious players and like serious capital onboarded and make that the norm before we go back into that exploratory phase.
But But we are. JP Morgan is very active, despite what Jamie Dimon says in public. JP Morgan is extremely active in crypto. BlackRock is in, Vanguard is in, Fidelity is in. There's a bunch of hedge funds that we work with. Some of them $500 million AUM, 10 billion plus AUM. We do. It just they are slow to deploy natively on chain. We have stuff like Bitwise that came out recently. So there's no shortage. We just need time. We have this expectation that we were used in the past cycles, where cycles lasted for a couple of months of insane growth and insane euphoria, and it's just not that anymore. And it's a good thing. The having boom and busts of over 3 and 4 months, that is just an incentive to build, low quality projects, low quality um, local quality protocols, and prioritize just extracting value, not actually building longer term stuff. And I forgot the forum post, but Satoshi himself said at one point that it's supposed to be back end financial infrastructure. It's not supposed to be at every stage this insanely exciting. Oh my God, NFTs are going to change the world. Oh my God, ICOs are going to change the world. It's we either mature and become institutional and work with banks and funds, and the reality of those industries is that they're boring unless you're a nerd like me or you, or it will just stay this very small industry that will do, I'll just say this very small industry that will have whatever NFTs and ICOs and meme coin cycles every couple of years. So I don't see it as a bad thing.
I agree. I think that the whole, like the way crypto has been conducted and the way we have conducted ourselves as an industry, I mean, you see it in the reaction and the perception of like crypto in traditional media and like among the normal population. Almost nobody looks at it from a positive perspective, and now making it a little more serious, but still trying to at least preserve some of the base principles of like neutrality, etc., permissionlessness. I'm pretty sure we won't be able to preserve every one of them in every single instance, but at least the attempt of such, in combination like with more reputable players, I would agree that this is overall a good thing. I think one like last topic for today, which I find pretty interesting, is Giza announced a few days ago that they are launching a new like agent-driven asset allocation. So basically, they are having agents running the strategies and like analyzing where capital is best deployed and optimizing with that. There have been some attempts of doing that in the past. Almanac has been working in a similar field, but there it was more about the strategy creation and like automating the research, less so about the deployment. So I think what Giza is building here is one step further in that entire stack, and I do think that the time is ripe for that, given that the capabilities and the skills you were able to train your agents with have improved quite significantly over the past couple of months. Is like agentic research, like automating certain things with agents, or like even giving them a certain like field of autonomy, is that something that is becoming relevant for curators as well? And how do you think that will shape DeFi going forward?
I do have a hot take here. We use AI all the time. We use it, like you said, for research. We use it for internal tools. So we don't really use Excel spreadsheets anymore. And anybody who saw the way we work knows that everything with us is formulas all the time. We use internal tools and dashboards that we vibe coded, and then we actually checked for them to do what they're intended to do. We use it a lot to analyze. We use AI a lot to analyze performance for markets, to see a lot of like specific cases where for what duration of time do we want to optimize a borrow rate arbitrage, for example. But that being said, I would not. You couldn't pay me to give an agent freedom on allocating capital automatically. And there are people that you know they say they do this, and I promise you they don't. Or if they do, I mean, I have nothing against my competitors. I love every curator in the space, but if everybody was using agents, I wouldn't, and I would be very happy to do so. The amount of stuff that can go wrong when you actually manage assets on chain, the amount of stuff that can break, and the amount of edge cases we always go into when when developing a strategy, they take so much like specific problem solving for that issue, that if you would give it to an AI and just deploy it, I mean, why am I talking to hypotheticals? Moonwell, they vibe coded some interface thing, so it wasn't even something complex, and they didn't even bother to check that the AI they gave it to, they priced CBE at like $1.27 instead of 2000 whatever it was back then. So I am sure it's an awesome tool. I haven't looked at it at all, but it's just generally when people tell you they have these agents and they do magic math, and it's the equivalent of telling GPT make me money, don't make mistakes. Like with the you know it's not something that you can do fully yet. And even if you can, I've given this example previously before, like when we started having high frequency trading in the early 2000s, and everybody on Wall Street was using bots to do forex and trade earlier. We had a massive flash crash at one point because everybody was using bots back then, and the meta became how bots trade. This is why quantitative hedge funds always have an edge, because they look at the behavior of other market participants, not as much the market itself, right? And if you have agents that are all trained on the same data and they all feed from each other constantly, you can easily, it's still very much possible to find inefficiencies in the market, and you will always be able to outtrade them over longer periods of time. Yes, they're very fun, and I use them as well for wallets. I play around with them, play around with some quant models, with agents. It's very fun. It's very cool. But we're not at a point yet. Maybe we will be in 6 months. Like we've been hearing for years that we're 6 months away from AGI and agents taking our jobs.
6 months
Where
away from the institutions coming on chain, 6 months
yes,
away from the agent. It's yeah,
everything is
six
six
months
months
away
away.
from AGI.
Exactly, and the only thing that appears to be 6 months away is World War III at this point. So quite a cool time to be alive, I gotta say. But no, I encourage, and I like seeing new projects, new protocols coming out. We definitely use AI. It's an amazing tool. It's an awesome assistant. But even sometimes, even when I do, like me personally, I use it a lot for research, especially when I have to dig into some docs. I use it to like condense the math, and sometimes still to this day, even though it's better than years ago, still to this day it does sometimes like very small dumb math mistakes where it
Hmm.
mistakes a minus for a dash, and then it doesn't do a subtraction or something. You still have these. And yeah, people will say, oh, just prompt better. Well, yeah, but still happens. So we're still a bit away. I think in the end you'll have hedge funds that are ran by like one person, and that person, if you're a good quant, you will be able to make sure that the output is good. This is where I see it going. It'll just be make it much easier to integrate with protocols, design a strategy, and then you check it. And all of this work that you would have done in 3 weeks, you can do it in a couple of days. That's where we're heading, and then a couple of hours, and so on, right?
I do agree with a lot of things said there. I'm probably sitting somewhere between you, who is still very on the like yeah, careful side of things, and maybe Onur and Danny, who have been on the pod quite a few times, who are much more exploratory when it comes to AI. I think it's like it is a necessity to really stay on the cutting edge of these developments. Like I personally feel like I've fallen behind by not really like I the way people who are as non-technical as I originally are able to interact and use these things, it is truly impressive. And I do think, like, I am quite, I think concerned is the wrong word, but I am very, let's say, aware of the drastic impact and drastic change that this can cause in the job market, in the overall, like, how money flows, how revenue is generated, and to whom value accrues in the next couple of years.
That
I
is
do
my
think
main.
that, yeah, like, look at geopolitics, look at AI.
That is
The
my.
only directionally wrong trade you can put on over the next couple of years is to be short volatility.
Yeah, that is 100% the case. Um, you said something, and I do agree with it, and it is something that is concerning to me. Uh, Capital attracts capital, and the more money you make, the easier it is to make money. And once you reach, a couple hundred million as a fund, you really start, raking in money. So, and this creates a paradox because we create more economic value overall, but it's concentrated more and more in the hands of like fewer and fewer people. And this is especially the case in like the US, for example. A bit less in Europe, but still heading in the same direction. The problem with AI is um, we are all feel like sleepwalking towards making a couple of people trillionaires, and the rest of us forget even the fact that economically it would be destructive for people to not be able to have even jobs that are, even though they're not ideal, they still feed you, like call centers, for example. It also, I'm concerned about like really young people that are starting to get into the workplace. Um, I started my career working in an office, and as annoying as it was most of the time, it helped me develop social skills and soft skills and be able to talk to people and understand how to, navigate discussing in an office environment and be more social, which we are. And I fear with a lot of white collar jobs going away, if they are to go away, this is going to affect the way we socially interact with each other. We'll be exponentially more isolated. So when you have people that only live at home in a bubble and only feed from an algorithm and have very little money, the potential that has to be radicalized, whether it's politically radicalized, religiously radicalized, is really concerning. So yeah, it's
100% agree. Personally, I'm also much more concerned about the societal and economic effects than like a tech doomsday scenario like in Terminator. I mean,
yeah,
but it mostly stems just from my incompetence of like properly assessing the technical risks. But the other stuff is just much more proximate to me. Like topics and themes that I've like dealt with and looked at over the past couple of years before AI became such a large topic in our day-to-day life. And yeah, I mean, being only 24 myself, I think I fit a lot of these sort of challenges likely that we all face. It's not that I'm pessimistic in my outlook. I would say that I generally lean more on the like realistic optimist side of things. But I mean, it's undeniable that there's a lot of uncertainty of like what will even accrue value, how are things going to be priced, and how do you manage to like not grow the discrepancy between what we actually need as a human species versus what is able to like generate and attract money even more, because I think that through consumerism, through the internet, through social media, we've already built up such a huge discrepancy in in these like almost parallel economies between, let's say, the real economy, food, energy, housing, what we actually need, and then like all of that consumer stuff on top that we have memed ourselves into culturally and that we were telling ourselves that we would need. And
but
there has
and
been a huge gap in that, and I don't know if that gap will be reconciled or only.
historically it always has been reconciled, but
I
it's
mean, it
not
has been reconciled,
a
but like under which conditions? Like
revolution.
how far do we have to get before it reconciles, and then what is the path to
It
reconciliation?
always happened the same way. It reaches a point where the pleb cannot take the lack of food anymore or the lack of opportunities, and not that I support the ideas, but it's literally Karl Marx saying the proletariat has nothing to lose but their chains. You get to a point where you are so stuck economically that literally anything else would be better than the current system. That's how communism collapsed in a lot of Eastern Europe and in Romania as well. There was no food, there was no money, you couldn't leave the country. And at one point, people were, even if it's going to be worse after, which it was for almost 10 years, at least there's going to be some hope at the end, as opposed to this. Historically, every time, Ray Dalio talks about this in his book, when the rise and fall of empires, like inequality. Yeah, we live in the most prosperous economic period in history by a very generous margin, but you still have a significant chunk of the population that lives paycheck to paycheck. 60% of Americans live paycheck to paycheck, and it's the richest country in the history of the world. In New York, I think it's something like 84% of the population lives paycheck to paycheck, and it's the richest city ever. At one point, you understand. I think, yeah, most of people listening agree that you should have economic freedom, and innovation should, we should allow people to build stuff and not overtax them. But it does come to a point where not taxing allows for monopolies to form and fewer people to control more and more resources. And I think AI is going to be a massive accelerator of that. It is already, actually.
No, I agree. Yeah, I think we should continue that debate when also Onur and Danny are on, because they're a lot deeper into the AI trenches than both of us. It was great having you on, Vlad, as always. Any top of points, any last topics, or any market outlook you want to share for this week and the next?
Just keep an eye on our socials. A couple of strategies coming out this week. And yeah, I'll just leave it at that. And also another big announcement from Tao, either this week or next. I have to see.
Perfect. Was great having you on, and was great catching up. See you around.
Seeing you. Thank you, Max.